Hi, my name is Drew Moore with Advanced Trading. As we celebrate our 40th year in business, our tactics and strategy have held true through the most turbulent market environments. Our disciplined and transparent approach to managing risk has allowed our producers to take advantage of the near historic prices that we're seeing today. As we navigate the upcoming volatility, we would like to be your trusted partner. Contact one of our local branch offices to speak with an advisor today. You never stop working, and neither do we. Good morning. My name is Drew Moore, and I've got Brian Basting, one of our research analysts, and Michael Reginelli, a commercial broker for us, to discuss the October USDA report. A little bit of a tale of two different stories here, with grains a little lower. December corn down 5 cents, December wheat down 13 cents, and the soy complex a little bit higher, with note beans up 17 as of this taping. And first question goes to Brian. Give us the rundown on corn here, and wheat, if you can.
The trade was really spot on, Drew, with regard to the production estimate and yield. Very little variance compared to the average trade estimate with either, as I mentioned, production or yield. So we have to turn to the supply-demand ledger, Drew. I'll start off with a bit of a surprise. USDA did bump up imports of corn 25 million bushels this month. So the production number was down 50, but imports are up 25. So that muted that a little bit.
Sure.
On the demand side, Drew, it's something to be aware of for the viewers. They did cut the exports by 125 million bushels, Drew, from September. So there is some indication that we're looking at more competition than expected, for example, via the export corridor in Ukraine, and especially from that record crop, Drew, in Brazil. So I just remind the viewers that as we get into fall here and that Brazil crop does reach the world pipeline, U.S. is not competitively priced at the moment, and USDA reflected that. Bottom line, Drew, on the corn market, about 50 million bushel lower on the carryout. Trade was expecting a little bit of an additional cut from that. Maybe that's reflected, as you said, in a little bit of a weaker market to start out with here post-report. Some of that may be linked to the import number. 25 million bushels is something to be noticeable. But having said that, I think we got to look forward a bit now in the corn market, Drew. Will this be the lowest corn yield estimate of the year? We continue to hear very good reports across the Midwest, not universal. I don't want to, by no means do I want to say that this is a universal whopper crop, but we are getting indications of better than expected yields. So that'll be the big question, Drew, as you approach the November report. And then again, between now and November, will there be signs that the export market will uncover some demand via the U.S. or not? Or will that export number continue to falter here? So switching to the wheat market briefly, Drew, I think we're looking at a smaller crop in Argentina, about a 1.5 million metric ton reduction in Argentina. Drought continues there. We're looking at very dry conditions during a critical month here of October. Indications are the dryness is going to persist, so maybe that number comes down a bit further in future reports. Looking at the Black Sea, Drew, briefly, no changes in production for either Ukraine or Russia. The big question moving forward, Drew, will be the export corridor fate. But one note on the demand side for wheat, Drew, USDA did reduce the feed residual for all wheat by 30 million bushel, and they did cut exports by 50 million. So we're looking at, despite the reduction in the September 30th small grains report in production, the carryout today was only down to 576 compared to 610 in September. So the wheat market's feeling a little heavy, as you mentioned a moment ago. Going forward, the fate of that export corridor, and keeping a close eye, Drew, on weather conditions in Argentina as well as Australia.
Very good, Brian. Appreciate that. Michael, can you give us a quick rundown on the soy complex and what you see there?
Yeah, sure. I think beans obviously shot higher out of the gate. We've leveled off a little bit now. The world bean stocks number was watched pretty closely, increased 1.6 million metric tons. Basically, it's kind of right on the trade average, maybe a touch higher. So I don't think that was the highlight. The big thing that got everybody was the yield number printing something sub 50. That certainly wasn't expectations. If anything, the market in general, analysts were steady from last month and maybe slightly higher, 0.6, 0.7 bushels per acre lower on the yield. So we knew we were going to have a slightly heightened supply in the beginning stocks coming out of the SEP 30 stocks report. Now we have lower supply estimates coming in as well. So the one thing is the carryout did stay the same at 200 million bushels. That's due to some cuts on the demand side of the ledger. They did increase crush 10 million bushels, which given extremely strong soybean processing margins makes sense. But they took exports down 40, which would be in line with ATI Research, Brian and his team. So overall, carryout stays the same. The yield estimate is what I think caused that initial shot higher, and that's going to be something to watch as we get a little deeper into bean harvest.
Absolutely, absolutely. Brian, back to wheat. Obviously, some tensions in Crimea specifically over the weekend. How do you see that unfolding here for the rest of the year with the tensions in Russia, Ukraine, and the tension with Russia and call it the rest of the world?
Well, you summarized it well, Drew. The tensions are rising when you look at the Black Sea region. As I understand, the export corridor agreement will expire approximately November 18th. So we're looking at a little more than 30 days out here. What will be the fate of that corridor? Because that has seen a fair amount of wheat leave the Black Sea region and supply the world needs. If these tensions continue to rise and that corridor is not renewed in November, big question marks arise in terms of who will supply the world needs as we approach the winter months here. So I think that it's a big unknown at the moment. We're reflecting that, of course, in the historic volatility, Drew, in the wheat market spreads, the intra-market spreads all across the board there, across all classes. So at the moment, the best we can say is that the export corridor today on October 12th is still in effect. Wheat and corn is still moving from the Black Sea region. What the fate of that be from 3 or 4 weeks or 4 or 5 weeks from now is a huge question mark. So the best we can say now is that it's uncertainty. The world does need wheat, though, Drew. It's an inelastic good, and that is going to keep this market, needless to say, on edge for the next several weeks and probably beyond.
Sure. Thank you, Brian. Michael, over to transportation. Barge freight has been a topic across our space here over the last few weeks to a month, right? And has impacted a multitude of different barges with the low water levels. How has that influenced basis and spreads here, and what's the outlook here moving forward?
Yeah, it's had a pretty significant impact, rippling all the way up. We've seen record high barge freight trade in certain corridors, record low water levels in St. Louis. If we don't get replenishment of moisture, the gauge in Memphis could hit record lows here in the coming week or 2 weeks. So we need moisture dramatically. There was a tranche of barges and tows that were released, arriving in the Gulf. Some should arrive today and tomorrow. But there's still a lot of inventory trapped north of Memphis and certainly north of St. Louis that's struggling to move. So as that happens, the timing's tough because we're seeing a lot of harvest activity and we have a lot of bushels looking for homes. So what that's done is it's had a weakening or a depreciating effect on cash in the country that's centric to those river markets. And it's also put a pretty significant influence on rail to pick up the slack. So we've seen a lot of rail freight getting tapped too. In areas where cars and freight trades freely. Obviously, those numbers have gone up as well, and so we're struggling as an industry to move grain into the proper channels and the proper pipelines as it stands currently. That barge freight inverse lasts basically all the way through Dees. Depending on when we can kind of replenish the river, that's what's going to help us kind of level out and get a better view on exports going forward. But as of right now, there's a healthy inverse Ocno forward, and it feels like there's going to be a little bit of a tail on this. So it's a challenge for the industry to get product going, especially as we have new inventory entering the market. And so it's created a pretty interesting dynamic that people as recently as a month ago certainly weren't expecting as we entered the early stages of harvest.
Right, right. No, thank you. I appreciate that rundown. Brian, when does South America dry up on bean sales and, are no longer the go-to market? That's a question from one of our viewers.
We saw this morning a couple adjustments that may give us some clues to that question, Drew. The USDA did bump up Brazil's bean harvest that they completed, of course, earlier this year by 1 million tons. So, and they have been exporting more than expected. Brazil has, and that may go at least part of the way towards explaining that. Their beginning stocks for this crop year that just started here are also higher than expected as a result of that increase. So what I would say, Drew, is that Brazil for the moment continues to have a lineup that is exceeding expectations. Having said that, they are going to begin to wind down here at some point. Our best calculation at the moment, Drew, is we're looking at U.S. September, October, November exports from the U.S. down maybe about 12% from a year ago. So I would say at least through the month of October, we're going to see some competition remain from Brazil. As we get into November and especially into December, Drew, I think Brazil will dry up and we'll continue to see an increase in U.S. shipments. Here's the fly in the ointment, Drew. What about Argentina?
Right.
Argentina has, of course, implemented their soya dollar program here, and they really have ramped up their shipments here during the month of September. They did ramp up their shipments. What will be the fate of those exports going forward? All in all, we're still looking for an uptick in U.S. exports in the Jan-Feb quarter, Drew, of about 6% compared to a year ago. But as Michael commented a moment ago, we did see the USDA reduce exports annually, Drew, by 40 million bushel today in the U.S. balance sheet. So here's a message I do want to share with viewers in terms of producer marketing. Today, the bean market, as you mentioned, is approaching $14 a bushel on the board.
Yep.
That means $13.50 plus on cash. An opportunity to get control of these bushels, get a floor underneath these bushels, and leave the upside open is an opportunity to do that. And the same thing applies with corn, Drew, looking at well over $6 cash off the combine, looking at opportunities not only for 22 bushels, Drew, but also opportunities to look ahead to 23 at this point.
Absolutely.
And Drew, real quick to supplement Brian a little bit, I think that's well said. Argentina is probably still going to be active in the month of October, wouldn't you say? Maybe doing 2.5 million metric tons, but it's going to drop off steeply in November, and then they're probably out of the market until May. So pacing a Brazilian harvest and timing Jan before they really ramp up Feb forwards, I think, going to be key.
Sure. Makes sense. Michael, another question from one of our viewers. Can you talk about ethanol margins here, in the spot month forward curve, and when do the economics get so poor that the guys, the producers, ethanol producers out west, shut down?
Yeah, I mean, we've seen a couple weeks of slow run rates support margins a little bit. A little rally in the broader energy markets has probably helped that to some degree. I would imagine looking forward here, we're still going to see areas of where you maybe have corn production challenges, higher basis. It is going to maybe slow production, slow run rates a bit going forward. I would expect a little bit of a rebound from last week in tomorrow's EIA report. I think on average 50 to 60,000 barrels per day, maybe higher than what we saw a week ago. So we are starting to see some life come back into it. In general, the West is going to be a little more challenged, specifically in those states, like I mentioned, with production issues, higher basis. I think right now Eastern margins on average are quite a bit better, maybe 15 cents better than say the Western belt, if you look at kind of the Eastern belt. Another thing to note, we did see 2 Brazilian boats come into the East Coast, which is pretty interesting here recently. I mean, that's the first time that's happened since, I believe, 2014. So that's another thing to keep an eye on. But we'll get an eye on the EIA tomorrow. USDA did drop their ethanol estimate 50 million bushels today. I think ATI Research, Brian, Larry, and their team are expecting 75 million bushels is what we had penciled in prior to the report release. So the USDA is trending in the direction we've kind of been expecting, but still may have a little more work to do.
Awesome. Well, thank you both very much for your time today and the intel. It's greatly appreciated, and we look forward to rehashing next month's November report with everybody. Thank you all. Have a great day.